These are the three charts that I always look for. I want to see falling WTI. So oil, there are a few other oil charts that you can look at, but I like West Texas oil. It's always been very good. And I'll just click there and show you. So oil's having a bit of a rollover here from about 96 level down to about 85. So that's a significant amount of volatility, but you can see the ramp up as action started to come back and fire away over there, pun intended, and also falling DXY. So falling oil, falling dollar, so the strength of the US dollar. If the war's ongoing, inflation fears are elevated, expectations around inflation are going to go higher, and so the dollar will go higher. Falling US 10-year yield. Now we want to see that either stop or come down. Again, the US 10-year yield's anticipating higher inflation on the long end. So if that is being rejected or coming down as well, that's the trifecta I want to see. And if you've read some of my material lately, particularly around the newsletter and also in the mastermind Discord, I think the US 10-year yield is the last domino to fall for Bitcoin. It is going to signal, and I think it's going to be inverted. So Bitcoin's price action is going to go higher while the US 10 yield is going to drop. Now, why is that the case? Well, I think the US 10-year yield is signaling lower inflation expectations, cuts coming in, more liquidity coming out in the US system. And I think that, again, is the last shoe to drop. Really hasn't fired since the last bear market, and we've been going higher. The 200-week moving average is our 4-year cycle reset point. We are maintaining our position above it. Wick. So we fell below it, bullish engulfing candles, back through it, then wick. We are chopping and solid. We're compressing between the 10-week EMA and the 200-week EMA. We're heading for a pretty big move, either that way or that way. It could go up, could go down. Again, no one bloody knows, which is why you have to have an upside downside. Now, my bias here is actually on a pop to the upside because of the significance of the move that we've had down to this point, also the weekly bullish engulfing candle, and the support that is being showing on top of the 200, which just keeps holding us up. Bulls are getting more and more confident that they can buy these type of areas. Every movement down is bought up reasonably strongly over time. That bears try and put in the knife through the 200 and they just can't. So I think there is a pop coming. If we can get above the 10 and the 20 SMA, so 10 EMA and the 20 SMA on the weekly through that area, that's all going to be really positive. So the bullish divergence on the weekly is not an indicator you want to mess with. Just like if you saw bearish divergence on the weekly at the top of the market, you can't ignore it. And it just sort of sticks there. It might take time to develop and expand, but it's there. It either has to, either the trend has to continue really aggressively downwards to invalidate the divergence or upwards to invalidate it, or it's a ticking time bomb and it's going to go off eventually. And it's a very powerful trend reversal signal. So if you have a look over here, the price action with Bitcoin through FTX kept going lower. It's lower low while the momentum's building over here. That's a bullish divergence. Now where we are over here, and this is the only time, by the way, it's ever happened in these lower areas, which is FTX bottom. And where are we at the moment? We're doing the exact same thing. And you can see price action dropping lower, bodies of the candles lower, and then higher low on the momentum. So really strong bullish divergence is emerging there.